Good morning, traders. This is Ed Carter with the Trader Vision 2020 featured trade idea, the setup and trade plan for Wednesday, October 17th, 2018. Before we get started, I want to apologize for not getting something out yesterday or so. We've had some issues. My partner had some technical issues, and so we weren't able to get together and put our heads together for an idea last day or so. Thank you for your patience. Today's featured trade idea will be COLL, Collegium Pharmaceutical. They're a specialty manufacturer. And as we can see here, COLL had been in a long-term downtrend. It's trying to bottom here, and on Tuesday had printed a Morningstar signal with the last two candles bouncing up off the 50, staying inside that rounded bottom breakout pattern. Also notice that we've got a double bottom here working for us, and one other thing that I think is that this sure looks like a shoulder, a head, and this could be a shoulder in here. So an inverted head and shoulders, all of which are in our favor and heading higher as indicators. So that will be the trade layout. I will be looking for us to come back a little bit to trend, so maybe an inside day buy here available to us. That's what I would be looking for. I'll probably use a buy box. Let's just do it that way. So let's make this a buy box right in here. Something like that. I wouldn't even be concerned. In fact, I would probably like a bounce up off of this support level, which we'll look at on the weekly in a moment, but you can see we've got a touch there, several touches in here, and several touches in there to make this breakout level at 1721. Let's remake this into a green box just to make it easier to see. That's our entry. We will set up our stop down in here. Let's shift. So I guess probably right in this area. Having trouble with my mouse. So I apologize for the issues here, but those would be my targets. Let's go out and look at this on a weekly and see if we can't figure out why I chose those levels. Here on the weekly, you can see the breakout, multiple touches here and there, and going back through history, you can go back and see we've had a bunch of touches. On up here, we've got some touches from below and above, and below and below and above and below, and so forth. And then that third one, that shelf's pretty obvious right in there. This one right here, a touch there, and basically touches in here and there. Could we move these things down a little bit or up a little bit? Any one of them? Yes, we could. Support and resistance are meant to be areas, not pinpoint to the penny prices. So that's how I drop them in there, and that's what I'm going to look at them as, but it could be a little bit before, a little bit after. So just bear that in mind. So those will be the levels that I'm looking at. Let me change this to keep my color patterns consistent. So those will be the prices we're looking at. Let's see if we can't plan out a trade with this. That makes sense. Okay. It reported August 8th, so we should have 3 weeks or so, I guess, till around 11/8. So 1, 2, yeah, we should have just about 3 weeks, just maybe a little over 3 weeks. But let's call it 3 weeks until we run into our next earnings. We've got a mixed bag, and this is a very volatile market. Tuesday was a strong rebound day. The pre-markets are down now. Well, NASDAQ, the Qs are up 0.5%, the Dow's down 1/3%, and the S&P's down 0.1% at this point. So they're mixed but down. This is a very volatile market. After yesterday's strong rebound of, what was it, 2%, 3% in the Qs, almost 3% in the IWM as well. I would not be surprised to see us fall back down, rebound down to just retest the bottom. So that's coming. This is a volatile market. You need to bear that in mind. With that said, we should have a Morningstar marked here. The long wick on this day makes it technically not qualify, but I'm going to consider that a Morningstar type, and so that would give me 3 bullish and 3 bearish. We've got the short-term bias of the signal and of the market. I'm sorry, the short-term bias of the market, the long-term bias of the market, and the long-term bias of the ticker itself working against us. We have only this short-term trend here, which has been really consolidating and now starting to move bullish, working in our favor. We have plenty of liquidity, about $8 million a day of stock traded, and we've got those patterns working for us. Again, let's plan this as 1 entry and 2 exits. As I said, someplace in that box, so let's see if I can't find something in the middle between 1766 and 1738. So let's just call it 1750. I'll just pick a number in there. And the stop down here, what B-stop's way down there, isn't it? 16 bucks. But right in below these lows here, let's call this let's call it 1680. Let's move it down just a touch. So 1680 stop. That first target up here about 1855, and that second target about 2015. Again, these are general areas. This is how I would plan it out, but you can consider your own version of where you think these lines fall exactly. Trade Vision says we can do 214 shares. Let's just look at 200 here. One of the ways you can manage risk is by downsizing. In fact, I'm going to do that again. Let's downsize that to 150 shares. That'll work. Downsizing to 150 shares. If we're stopped out, we've got a $105 loss here on a relatively small position. Well, reasonable position. If we sell half at that first target, we're not quite getting 2 to 1, so we need to bear that in mind. We're getting 1.5 to 1, so we need to talk. Is it something we should be trying to catch this lower? Is it something that we can tighten the stop? I don't want to tighten the stop above where I've got it. So about the only thing we could do is look to catch this in the bottom of this buy box, stretch it down a little bit, and so instead of 1750, maybe be looking for a 1740 type of entry, and that's going to get us pretty close to our 2 to 1, close enough that I would live with it. And if we can sell half there and hold on to the rest, we have a chance to get up to that second target. At that point, we'll be able to get almost $300 in profit off of it. For this account, it would not make the trade goal. I would have to bump up the trade size to make this a reasonable trade to achieve the goal. but it still would get us with a small risk. Now only $90. Once I move that price down, we are risking 90 to make almost 300, and that will give us 3 1/4 to 1 if we made that second target. So overall, that would be a decent trade, taking profits at that first level, not quite 2 to 1. So taking a little more risk than I would like, but on a small position size, or smaller position size. And basically getting us a good reward to risk if and only if we make that second target. So that will be our trade idea for today. Overall, it could be an 11% trade, and I like the setup quite a bit. As I said, we've got this double bottom, and we've got an inverted head and shoulders working for us there of a sort, as well as what I consider to be a Morningstar type here with a double tap bounce off of the 50. So that will be our trade idea today. Please evaluate this against the market. Remember the market we're in. Extremely volatile. This is probably going to equate to the IWM, so let's just look at that. In fact, let's leave it on daily got here. So as you can see, brutal market for at least a month here. Bounced the last couple days, but very volatile in here, and a lot of resistance ahead in the market, just above. So it is a very risky market at the moment. With that said, that will be our position. Where did it go? That will be our trade for today. And if you look at the market and decide you want to take it, I wish you the best of luck. Also make sure it matches your trading style and rules. But after that, I wish you the best of luck if you make it, and if you don't make this trade, we'll see you again in a few days, and maybe the market will settle down and get back into trending for us. In either case, I hope to see you in the trading room.